Hello from Trend Signal for a review of the data and events the week beginning the 28th of January. An important week for markets as we get the Fed monthly policy meeting and non-farm payroll thrown in. We've also got the first reading of Q4 GDP in the Eurozone with both Italy and Germany who posted a negative Q3 GDP readings could enter into a technical recession if they do get negative numbers again. Markets last week, equities sort of on pause, really trading sideways. Q4 results continued to come in from the on the US side, that is, with mixed impact. The dollar had a big move Friday, sharp fall prompted by profit taking, but most likely by news that the Federal Reserve might end its operation to shrink its balance sheet, or quantitative tightening as it's been referred to as opposed to quantitative easing. Certainly this amounts to a loosening in monetary policy, hence the fall in the dollar. Sterling had a spectacular move last week as the overwhelming short Brexit positions were squeezed out against the dollar. Sterling was 2.5% higher, whilst against the euro it was about 2% higher. Reasons? Probably almost certainly the probability of a no-deal Brexit seems less likely, whilst a softer version seems to have grown in probability. Time will tell. There are more votes on amendments that are going to be tabled on Tuesday. We may see an extension to the Brexit deadline, and Theresa May be directed by Parliament to go back to Brussels and to renegotiate elements of the backstop. Both of those amendments could pass, and they are both compatible. So that obviously the dollar had a reaction in dollar-based commodities, hence the reason why gold jumped last week, up $21 on the week, mostly happening on Friday, as all precious metals, in fact base metals as well, all legged higher as a consequence of the fall in the dollar. Data and events this week, let's get straight on to it now. It's a busy schedule. On Monday, we have Draghi and Carney speaking, more unhelpful waffle. Some people may refer to it, but I think Draghi's maybe slightly more interesting as he's testifying about the economy and monetary policy before the European Parliament in Brussels. So that will have an effect on our markets. I think Carney's talking about the future of money at some Bank of England forum. I think the future of physical money, not whether we need money. Tuesday, we have the consumer confidence data from the Conference Board in the United States. Maybe taking a little knock from recent market turbulence. We shall see. We have Australian inflation data in the very, very early hours Wednesday morning. But Wednesday is dominated really by the Federal Reserve. But before that, we have the precursor to the non-farm payroll on Friday, the ADP non-farm employment change from the private payroll company ADP comes out at 1:15. It's attracting less interest as the months go by. It is a particularly volatile number, but 170,000 forecast from the 271 last month, similar to the Bureau of Labour Statistics last month that posted a big number. Then they're also looking for a lower number of about 165,000. So very much in tune with the official data coming out on Friday from the Bureau of Labour Statistics. The FOMC meeting, no rate rise expected. Maybe more guidance on rates. Remember, the Fed has implied through its dot plot 2 rate rises this year, but the market thinks less. And maybe we'll get a bit more color on the balance sheet reduction rumors from Jay Powell in his press conference. The statement could help provide a little more information and color on some committee members who have become slightly more dovish recently, mainly as a result of the market turbulence, really. But that's the Federal Reserve and the FOMC meeting concluding at 7 o'clock on Wednesday. Thursday, we have the Eurozone fourth quarter GDP, the Euro GDP slipping below that of the UK, believe it or not, and for all the talk, expected at plus 0.2%. The UK is expected to have a GDP in Q4 of +0.3%. What is interesting for some watchers are certainly the economies the likes of Italy and Germany that posted negative GDP numbers in Q3. Should they post negative numbers in Q4, and apparently they are expected to do so, that could result in both economies going into what's called a recession, or a technical recession, based on that classification, as it were. The reasons, well, Italy has underperformed for years and seems to continue to do so. Germany, really the heavy industry, exports cars, car exports, all suffering from a slowdown in China and the Far East. Certainly 30% of German exports went east, so you can see why the China slowdown is having a direct impact on the German economy. Friday, let's jump to Friday. Well, that's the non-farm payroll data. New jobs forecast at 165,000, down from 312,000 reported in December. Average earnings somewhere between +3% +0.4%. Fed watchers still keep a weather eye on that, as if average earnings do start to accelerate, that will be of some concern to the prospects for inflation. And then we have the last bit of data for the week, so official date, well, economic data, I should say, which is the Institute of Supply Management Manufacturing PMI data. Better than last month, only marginally. 54.3 is expected versus 54.1. On top of all of this, we do have more Q4 earnings. The big companies such as Boeing, Caterpillar, Lockheed Martin, Honeywell, ExxonMobil, Chevron, Royal Dutch Shell, Novartis, Pfizer, Merck, etc. But the main event is from the tech sector and Apple. Remember the angst caused in the markets when Tim Cook published a letter saying iPhone sales were not as expected in China, led to a sharp fall in the Apple stock and a general fall in the market as economists fretted over a slowdown in China, which could also lead to a slowdown in global growth generally. Apple's results come out, I think, after the bell on Tuesday. So after the bell on Tuesday. Amazon, I think, on Thursday. Steady revenue growth and profits growth there, but it's the Apple numbers that will be of greatest interest. That's it. Thank you very much for listening. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.